Hi everyone, Danny here from SimplyDoIt. Thank you for joining. My goal is to do a quick analysis or evaluation session about this property. Okay, let me just say this. I am very excited about this property. I think it's a rare gem, and I am putting a lot of time in, I think, to finding those rare gems. And I hope in this video to show you why I think this is a rare gem. And towards the end, I'm going to talk about ways you can buy it, money-wise, financing-wise. I'm going to explore or briefly explain 4 ways how you can buy it. This house was found recently, I think June. I spotted it June 8th, 2020. It's still relevant. We are a day after, I think June 9th, it's still relevant. And it's been sitting on the market for about 45 days. And this I want to show you why, kind of an evaluation of the property and why I think not only I'm excited about it, but why I'm so excited about it, much more than any other properties or other properties that I look at. So just a brief kind of give you a little bit of a feel. This is the condition of the house. We can see from the photos that it needs paint, it needs carpets, probably lots of touch-ups, laundry list, stuff that are kind of wear and tear. So that's what we know from the photos. In the right-hand bottom side, you'll see the backyard with 2 AC condenser. I actually spoke to the seller, and the seller informed me of the following issues. He said, one of those units or condensers is not operating properly. Doesn't mean it needs to be replaced, but it probably needs to be serviced or maintained, maybe replaced. We don't know just yet. He told me there is some roof leak that resulted in mold. He does not think the roof needs to be replaced, but there is definitely some roof issue. So we're going to need to address that. He said that the water heater is not working. And other than that, paint, flooring, carpets, whatever, and maybe some miscellaneous thing needs to be done. The house has all the appliances. And I'm looking at this property as a rental property. So my goal here is to rent it out. Now, let me tell you this. If I buy this property and only deal with with the must, let's say the roof and the AC and some things that are broken, I can probably rent it out as is, with the crappy color, with the crappy carpet. You could probably rent. It will probably get a lower rent than I would want to, but I could probably make it work. But in order to maximize the rent, be attractive to renters when I'm done with it, kind of look and collect higher rent, I would probably need to at minimum paint the entire house, take care of the floorings, probably needs to be replaced. Maybe some of them can be saved and cleaned, maybe, but let's assume that's not the case. Take care of the water heater, AC condenser, roof, miscellaneous items I'm sure that are that exist with this house, like a normal wear and tear. So far, no inspection has been done, no red flags. We would only know them after we would do an inspection, right? So be aware, I'm only talking based on what I know about this property, what I know from the seller, and not based on actual inspections. So keep that in mind when we move forward with this. Now, the market value of this house is $240,000. We are about 30 minutes from downtown Tampa. $240,000. The asking at the moment is $200,000. So that means $40,000 below asking. Our suggested offer is $180,000. So that means $60,000 below market value. So right there, we're seeing that this is already a good starting point to buy this house at that price. I don't know if we'll get it for $180,000, but let's assume we can, right? Maybe even less. We'll talk about that in a second. So my starting point with this house, if I can get it for $180,000 and put a $20,000 into it in renovation, in remodeling, is already a good starting point. Remember, especially when people are thinking about if the market would crash and what's going to happen, here is a way to hedge. How do we hedge? We try to buy as with a much discount as possible, right? So that's a good starting point right there. is already starting with a good pricing on this property. So between market value and the pricing we have in mind is about $60,000. Of course, we have closing costs, remodeling fees, etc. So it's not going to end at 180. And again, this is not a guarantee that they will even accept 180, but we suspect they do, because this house has been sitting on the market for 45 days, right? So 45 days it's been sitting on the market. That usually means motivated seller. Doesn't mean it is. Let's go briefly about the numbers. So this is what you're seeing here is our analysis Excel, which we try to evaluate the property for rental analysis based on what we know as accurately as possible. So we have the specification. It's a 2005 build, almost 2,900 square feet. So on the bigger side, I already talked to you about the numbers, the asking, the offer, the market value, the renovation, some other expenses that we have. Here's the mortgage assumption. I'm not diving into the details. It's self-explanatory. Market rent here is about $1,850, maybe a bit more, but $1,850 right now. And then we have all the expenses, the overhead expenses, the ongoing expenses such as property taxes, insurance, repairs, management, leasing, HOA, etc. So all those numbers are factored in. By the way, one more thing I'm excited, or one more reason I'm excited about this property, the schools in the area are, I would say, B+, A-, however you want to call it. So there's 6, and 8. Another reason why I'm excited about this property. Moving on, let's talk about the analysis. So this property, what you're seeing right now is based on the assumptions we made here at this page. We're going to see what the analysis comes to. And the analysis, if you look at this table, you would see it's divided into the number of years: 5 years, 10 years, 15, and 20. What does it mean? 5 years? It means that we don't analyze a property based on its performance on the first year. We take the first 5 years and we analyze. We take the first 10 years and we analyze, and so on. Based on the 5 years, you can see that this property is estimated or projected to generate $623 a month on average in rent, in cash flow. Cash flow means after expenses. After all the expenses that we talked about here, you can see there's $633 of the mortgage payments and $644 for the ongoing overhead expenses, right? And we still, we even have a little bit of margin of error, or actually quite a bit, in case this property, we're off with the numbers. So here are the numbers. Here's the return, return on investment. One thing, and this is a performance, the lines in black. The orange over black, the lines that are orange over black, the $623 means this is an average cash flow per month in the first 5 years. So I'm analyzing all the figures in the first 5 years, and then I'm taking out of it how much the cash flow is projected to be, per month in the first 5 years. I don't analyze or evaluate what's happening in the first year. That doesn't tell me the real story of this property. And of course, 10, 15, and 20 years, you can take a look by yourself. Same thing for the ROI. Now, if you ask yourself, what is this? You got to be crazy. 26%. That's too good to be true. You're absolutely right. Those of you who think it's too good to be true, stay away. This is not for you. Let me explain to you briefly why and how we measure the analysis, so you can understand a little bit better how we got to this number. The total ROI, the total return on investment, is the cash on cash, which is pretty high, an inflation rate, let's call it 3.5% a year in the first 5 years. Okay, so it's assuming there's inflation, assuming the cash flow, and assuming or calculating how much principal we've accumulated by paying down, or equity we've accumulated by paying down the mortgage principal. Every month we pay the mortgage, there is a principal reduction. Every dollar in the principal reduction, it's dollar not in my pocket literally, but in the walls of the house. Okay, so 3 factors: cash on cash, Inflation, not appreciation. Pay attention. Inflation and principal reduction. When you accumulate those three, you get to a higher ROI. If you don't agree with this analysis, that's quite all right. You don't have to do it this way. Do whatever you want. That's quite okay by me. I'm just presenting how we go about those deals. And we obviously measured the analysis over the actual amount we spent out of pocket to buy this house. In this example, if you look at section 5, it says cash outlay $78,000. That means every dollar we spend, from the down payment to the remodeling fees to other fees or closing costs, that brought us not to purchase the house to the point of rent ready. Okay, I don't care how much, I don't care just about the down payment. I care how much it brings us all the way to make it rent ready. So we spent $78,000 for this one. And that means this is the $78,000, my benchmark, is where I measure my return. So that's where I start, and that's how I get to those numbers. So you are free to use whatever analysis you want. I think most of you will agree that a property like this one that generates $623 on average, you know what? Let's say I'm super optimistic, $500 a month. In my world, that's called amazing. Okay, that's called amazing. Now, I'm sure all of you have your criteria, investment criteria set. And if you don't, not okay. Make sure you line them up. But here's the investment criteria that we have for this house. Schools, this house passes the investment criteria. So in the purple background, you see what the investment criteria default are. And in this property line next to it to the right, you see how this property is performing compared to the baseline criteria. This house, we pass with a flying color, the school, the square footage, the bedrooms, the bathroom, the year, the rent purchase price ratio, the float, the ROI, all, pass. So that's immediately, should be something you consider. A great property, great, great numbers. I love it. Here, I just want to give you a feel of the comps. So I ran different models. We got probably as low as 235,000, and it's probably as high as 250 or 255. I can't remember exactly. I just want to give you realistic. Here is what we ran. We came up with about 240. This one actually says 238. That's fine. I hope you forgive me for the $2,000. I think it still presents the general mindset here. So about 240,000. That's the comps for this house, and that means, it shows very well. The comps are showed very well. By the way, strong comps here. We can see that they're recent, many of them are recent. We have not all of them. And that's a good start. Again, this is a very quick comps. If I were to run a more detailed comps, I would spend more time in making sure I'm running it as accurately as possible. I just want to give you what I call a feel for the value. A little bit about the area. This is not what about you're seeing. This is more about what you're not seeing. And what you're not seeing: major highways nearby, none. Water treatment facility, none. Airport, not that you can see here. Some commercial building facility next to the neighborhood, none. Mobile home parks nearby, right next to the none. So I'm just trying to see what is the problems or what are the urban nuances that we can see. None. I love it. None means good. That's exactly what I'm trying to see here, that we don't have all those issues. Again, that just makes it even better. Okay. Now, when I look at the community from a very close, from a closer view, what I can see, again, it's not what I can see, it's what I cannot see. I'm seeing cohesiveness. I'm seeing a boring community. The houses look like cookie cutters. That means, for me, I love it. It means it yells boring. Boring is sexy. That means a community. That means a middle class or upper middle class community. That means nice houses, nice neighbors, a nice sense of community. That's exactly what we want to see. This is perfect, right? Nice house in a nice community, not as some, you know, out in the wild or in the suburbs or rural Tampa with no neighbors around. That's not what I'm looking for. Some people may look for it, not me. I want to see a very, you know, similar houses, similar community. I want to see as much as possible identical houses, although I don't like them to be 100% identical. But like the song says, they all look just the same. Perfect, perfect. I love this house. I love this community. I love this area. This is just something I ran to see the different problems this area has. It gives me about crime and register. By the way, it doesn't say here, but crime is like doesn't exist. You know, registered sex offenders, none, which I rarely see that. All the major issues, but there are, when I look through this model with those circles, there are always more red and yellow circles than we have now. That just makes it even better, right? So keep in mind, even this one, you know, works well. Now, remember at first I told you that I will talk about 4 ways you can buy this house. 4 ways you can acquire it. Number 1, cash, easy. Number 2, conventional financing. This house would probably qualify. I can't guarantee, but most likely. Number 3, we have a specialized lender that can help with finance the remodeling fee, right? The remodeling fee. So if you need help with financing the remodeling fee, we have a lender. It's a bit of a tricky one, but that can help. That means it will be able to help by dropping the $78,000 to a smaller number, right? That's just to give you a sense of it. Sometimes we even have a 4th specialized lender. It's very much on a case by case that could work with a better financing options. This one, I'm not sure. I have to check if they are or are not available to do that, but absolutely something we can consider, you can consider on a case by case. So again, 4 conventional ways, right? If you want to be creative with hard money, with private money, with HELOC, of course you can do that, but I'm just talking about 4 conventional ways. Before I wrap up this session, I want to make sure you understand the following. This house is fresh. Fresh. I found it yesterday, June 8th, 2020. That's not going to last, you know, forever. So if you contact us today, tomorrow, in the coming days, and to find out if this house is available, you know, it may still be. I don't know, right? It could be gone tomorrow. We never know. Like I said in this video, I gave you all the reasons why I am crazy about this house, why I think it's going to make a great rental property, and explain all the reasons. If you want to find out how you can purchase this house, get in touch with us. We will help you put an offer. We will help you with questions. We have the teams, property managers on the ground, remodeling team on the ground, lenders, as I said. So you don't have to ask yourself, what am I going to do? Who's going to manage it? Who's going to fix it? We have all those boots on the ground for you. We don't offer deals without boots on the ground, okay? Vetted boots on the ground. So we can help you with that. All you need to do is get in touch with us. Get in touch with us. My email is meet@simplydoit.net. Meet like meeting, MEET, @simplydoit.net. Simple as that. Send me an email. Get in touch with you on Facebook. On, I don't know, on YouTube, you can send me a message. Anywhere, you know, I'm all over the web. It's easy to find. Tell me, you know, if you have questions, ask me questions and see if you can actually buy this house and make it a great rental for you. I hope this helps. And most importantly, I want you to help yourself by buying this or a similar one for your portfolio. And I will say this, a lot of the investors that, you know, that we work with are stuck. They're stuck because of the corona. They're stuck because they're fear. I got 2 phone calls today from active investors saying, you know what, I think I'm stuck with the paralysis analysis. Whatever the reason, we are very, very good with not only finding properties and analyzing them, but helping investors, individuals, to get unstuck and move forward with investing. We work with beginners, we work with experienced. I have helped more than 4,500 properties, rental properties, to be purchased nationwide in more than 40 metros. So we have a little bit of experience how to not only find houses, but also how to help you take it to the next level. Thank you for taking the time. Thank you for listening. Send me questions, give me comments, get in touch. See you guys later. Have a terrific rest of your day. Bye-bye.